Christmas has come early. Hello and welcome to today's Daily Blitz. Now, for investors all around the world, Christmas has already come early. If they look under the tree, they will find that there is a present from the European Central Bank, from the Bank of Japan, and from the Federal Reserve. For the first time in history, in fact, that all three central banks have been easing at the same time, right?
Yeah, that's the key, at the same time. If you look at the chart that should be on your screen, now you can see that in the past during QE, there was a difference between the central banks. So there was always at least one not using QE at the time. But as of late this year, all three central banks, the biggest key central banks in the world, are using QE at the same time, which means this is unprecedented. It's never happened before.
Yeah, so while the Bank of England is not easing at the moment, because global markets are interconnected and global capital is global and mobile, effectively what this presents is for investors all around the world that there is more liquidity flooding into markets everywhere. And as you say, this is the first time it's happened for all three to be doing it at the same time. Now, in previous episodes of the Daily Blitz, I have opined that I believe next year may well be just like 2017. 2020 is 2017 all over in terms of risk assets doing very, very well. Now, this would, I think, further sort of adds to my point that next year is going to be very, very bullish for risk assets. So I could be quite wrong if something big breaks like Deutsche Bank, right?
Yeah, the idea though isn't that the QE just pushes up the risk assets, it's pushing up all assets. So Deutsche Bank has this box of different asset classes that it tracks. And as you can see from the chart on the screen now, all of them rose. And that's really bizarre and unusual as well. And that's showing the effect and the power of this QE that's coming in from all the different central banks. So it's a really weird environment where not just the risk assets are booming, but everything is.
Right, and just like in 2017, where you got this big boom in pretty much in everything effectively. What was interesting at the time was that active investors, so those who pick stocks and those who go for value stocks, the undervalued types, were getting really squeezed and, in fact, in some cases, going out of business simply because all of this QE and all of this stimulus was effectively just supporting the market as a whole. It wasn't helping, the most efficient businesses. The capital was not being allocated to the most well-run businesses. Instead, it was just going into the market broadly. So passive indices like S&P 500 trackers and the like did incredibly well at the time. You didn't need to be picking and choosing which were the best companies, which were the best bonds either, simply because everything was going up. And if we take all three of the central banks acting in concert together, what this could be is yet another repeat, but on steroids, of simply everything going up, just as Deutsche Bank has illustrated in that table.
There's another difference though compared to what's been happening historically, and that's usually at least one of the central banks is the laggard, is sort of behind the curve on its QE. Right. And that means all of this has like a currency war element to it, where one central bank uses QE to get ahead by dumping its currency, the next one gets ahead by dumping its currency, and they're constantly trying to outdo each other, which means there's always sort of one place in the world that's falling behind or struggling. Yes. But this time, like you said, it's in concert. So it's possible that not just all asset classes booming, but everywhere in the world as well.
Yes. In previously, sort of another perspective on that was that central bankers were effectively taking it in turns almost. So they couldn't afford to just do all of it themselves because it would look so blatant, it would be so extreme. So instead, the European Central Bank would do it for a while, then the Fed would do it for a while, and it was like they were doing each other favors. But now they're all doing it all at once. And so as a result, Christmas may already be here for investors because they've already all started together. But thank you very much for watching today's Daily Blitz. That sums up today's episode. And be sure to tune in next time.